Yo, what up everyone? In this video, I want to go over some trades that I took. We took some clean setups using very simple price and volume analysis. I took a losing trade, bounced back, and took a very nice winning trade. I'm also going to get into some other setups that we took in my Discord community, along with some overall market context using supply and demand and price and volume analysis, which is the best in my opinion. There's a lot of lessons to learn. I'm just going to go over a bunch of different charts, technicals, and some psychology backing each setup. But before we get into it, if you haven't already, I'm going to link my Instagram in the description below at Amertitrade. I definitely recommend following this. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link is in the description below at Amertitrade. It's a very good resource. You're missing out if you're not following it. But now let's get right into this recap. First trade was on Wednesday, October 27th. It was a losing trade. Everything worked out. My entry was perfect. My analysis was perfect. It just the market wasn't agreeing with when I was entering at that time, which just happens. It's normal. However, I want to get into it because it's going to bring context for the trade that I took, which was a winning one. Lucid, LCID, I normally don't chart or trade this name. However, a member sent me this chart and it looked very good. And it looked too good to pass up. So that just goes to show you how well Amertitrade members are learning and really trying to go for that self-sufficiency aspect here, which is the highest form of trading. So I said the chart doesn't look bad if we build what I call VVM intraday. VVM is a gauge that I use to measure participation and interest in the market. Amertitrade members know exactly what I'm talking about. I said I'm watching the $28.50 and then $30 level to play long above. There's some nice volume patterns on the daily and accumulation in my opinion. So if we go to the daily chart, you're going to see some nice volume coming into the market after about a 7-month period of consolidation, some volume starting to pick up, and we saw some very key signs of accumulation building into the market. When I get this type of analysis, now my job as a trader is to find areas of interest where I could look to trade, where I will be able to react to the market participants, that I could come up with a quality trading setup. The first level was at the 28.50 area, and then the next one was at 30. So I want to use my gauge that I use to measure participation and interest in the market. And on Wednesday, I longed Lucid above this 28.50 area in the first 5 minutes. Some very strong buying volume, heavy volume compared to what we've normally been seeing. And right away, the trade didn't work out, and I stopped out below the 28 or 27.90 area for about a 50-cent loss, 60-cent loss on this trade. I was watching it for the rest of the day to break back above that 28.50 level, but it didn't come until the next day. On Thursday, October 28th, we were gapping up, and if you've seen my last trade recap that I say I love to see when VWAP acts as support, especially in pre-market, just as it does in intraday. So this was on watch. Pull up the pre-market plan for Thursday's action. Still on watch. It's playing games in the 28.50 area. So for me to play long, I need us to hold inside and create interest. Ideally, a 30 break will send it flying, but we could try and find an entry earlier with some intraday clues as long as the risk to reward makes sense. Again, the way I trade using price and volume is spotting a trend or spotting context on a larger time frame picture. For example, on this daily chart, this is the first step. I find larger time frame context, areas of interest that I can look to be a participant in the market. Once I get the context that either buyers are factored in or above this level, we really don't have supply, we really don't have resistance, then my job as an intraday trader is to find clues where my risk to reward makes sense and there's interest and participation in the market. So we opened up, pull this up here, and in the first 5-10 minutes, volume was very, very heavy. You could see the very heavy buying pressure down here. At the one point, this daily average volume, in the first 10 minutes, we were, I think, 30 million shares or 20 million shares. We were about half our daily average in the first 10 minutes, which is a very convincing sign that you want to see, especially on a continuation or a breakout type of play. So you always want to see volume. I cannot stress how important price and volume is for you to be able to read it, not only larger time frame context, which is step one. But step two is try to identify opportunity intraday. So volume and price is the best sign. So in the first 10 minutes, this is exactly what it looked like. Show you just like that. And we were watching a break above 28.50. We could hold inside. I'll go to a 1 minute chart to show it a little better. This looked like this. And at 9:41, I entered Lucid shares. Now, I didn't trade options on this just because I'm not familiar with how they trade. I'm not confident enough. Liquidity really wasn't too high. So I prefer to trade the shares on this because it's a lower price stock and it gives me a little more control. However, if you were to trade options, these went up, 1,000% today. So I know a lot of members did trade options. It's just I stuck with the shares because not only did I want more control, it was just I wasn't comfortable trading the options on it because I never have before. You all know I trade the same names, so I know each individual stock's personality. For this name, I really don't know it. So if my comfort level is there, I'm more comfortable trading shares. Now, another thing I want to note, I'm just going to minimize this so you can see this indicator here at the top. This is an indicator a member actually created in the Discord for Investor-Trade members exclusively. It shows the first 5 minutes, 15, 30. It shows the daily average compared to what we are doing today in a specific time period. So the indicator down here shows what it's going for today, so far intraday. This shows in a time period, first 5 minutes, 15 minutes. So in the first 5 minutes of the market open, we already did our average of the past 90 minutes and the past 30 days. So again, that just gives me that added sign of volume visually, not so much on the chart, but more of a statistic and data wise. So then we start moving up. I'm long at this candle right here. My stop loss. So why I longed on this candle, I longed at $29. I posted my entries and fills in the Discord for members that want to go see it. I will say the Discord I get tons of DMs after I make these videos, is only available to Investor-Trade course members. There isn't a Discord only option. I do not charge for it. It comes with access to your course purchase. However, I got long at 9:41. My stop for this trade was below 28.60. I wanted to give it a little breathing room below this area right here. I bought the dip. Stop loss was about 50 cents, 40 cents. And my potential, if we broke above 30, was at least a 3-to-1 risk to reward. So risk to reward made sense. Then it was a stress-free trade. And these are the best trades that I take. Ones that are stress-free, ones that are showing interest in the market, ones that once I enter, it starts moving in my favor right away. And we got that push up. And at 10:04, I got out 50% of my position right here. As soon as we broke above the $30 level, we were up about $1 from entry. I took my 2-to-1 risk to reward, took some off the table, and I used my take profit strategy just to squeeze more juice out of the lemon in case the thing wants to continue running. I got out some there. Again, dips keep getting bought up. VWAP is pointing up. Volume keeps increasing. At this time, we did over 1,000% of our daily 30-minute average of volume, which is a crazy number. Or we did 1,700%, matter of fact, which compared to our daily average of 1.2 million, in 30 minutes of the market open, we did 21 million. So that just shows a lot about the auction. And we keep moving up. And then my next scale out was at 11:01. So I held this dip. Again, a good psychology tip is if you're in all the way down here, maybe switch your time frames a little higher, ride the trend. As long as we make higher highs, as long as we make higher lows, you should be fine. We kept making higher highs. Every dip was still higher than the previous low. We're still maintaining the trend. You can't let a few red candles freak you out, especially when you scaled out some of your position and you have reduced size. You have to play with house money. That should be your goal as a trader, is get such a good entry point that once you do exit your first maybe scale, now you're playing with house money that the trade can never ever go red on you. That is trade management. And in my opinion, trade management is just as important as risk management, because you could have the best entries, the best exits, but if you do not manage your trade well, you are going to lose 90% of the time. So we continue rallying, and then I got out another 25% of my position. 11:01, it looked like this right here. We were holding above the 32 level. Just wanted to protect myself a little more. Again, I'm up $3 on a 50-cent risk. So I got 6-to-1 risk to reward on this. Didn't have any upside targets above this. Now at this point, I'm even more playing with house money. We continue to move up. Dip keeps getting bought up. And at this point, I think around noon or 12:30, I stepped out of my office. 10 minutes later, I get an alert on my phone, and we rally another 5 points. Now, I'm only in 20% of my position at this point. So yeah, 20% would have been another $5 move, and I could have paid, even more. Probably could hit that 20 mark. But I missed that move, and then as soon as we pulled back, I got out my full position at see right here. I think at 204 I got out my position. As soon as we broke below VWAP, we broke below the previous low. This is the backside of the stock. I got out my full position. So heavy volume at the highs. That just shows a lot of traders are chasing an extended move. Again, the idea is to get in before the move happens or right during it happens, not when we're up $10 from our original entry. So your job as a trader is to identify larger time frame context, identify where there may be opportunities, levels of interest, and then use intraday clues, price and volume related, to pinpoint an entry where your risk to reward makes sense. So this was a beautiful setup. Very happy with my execution on Thursday's action. Same setup we were looking for on Wednesday happened on Thursday. So if you took a loss on this day, like I did, brush it off. The market will always be here. There'll always be other opportunities, and you could have capitalized on a 10-point rally. Sick move on Lucid. Just going over these options, just for fun. Let's just say we traded the 35 calls. Let's go to this chart. Yeah, look at this move. I mean, this is the power of options. Now, like I said, I didn't trade the options, but the low of the day was at 6 cents. They went to a high of $6. That is, my math's correct, a 10,000% gainer. 6 cents into $6. Even if you caught the $30 break at 80 cents and sold at $1.90, that's still a 100% gainer in a hour period. And it went up another 600% after that to the highs. So crazy move, illustrating the power of options. I'm telling you guys, if you were to listen, you watch my videos, understand price and volume moves the market. My analysis is very simple. It happens to me all the time. Look at this actually. 367 million lots or million shares traded today compared to a daily average of 41 million. Crazy. So like I was saying, price and volume is really all you need. If you look at my charts, you look at my analysis, it's very simple. I don't overcomplicate it at all. As traders, and like I was saying, it happens to me, we are the ones that make it hard on ourselves. The market doesn't make it hard on ourselves. We make it hard as traders. Our emotions, our thoughts, our analysis. It's a constant cycle of things going through our brain. The more simplistic you make it, the better your profits are, the better your results, and the increase of progress you're going to gain and the knowledge you're going to gain in your trading. So just believe me on that. I've been trading for over 6 years now, and price and volume is what physically moves the market. My charts are very, very clean. Another trade was on Amazon. Now, I did not take this. I'm just illustrating the power of supply and demand and price and volume. We had a clean rally prior to earnings, right inside of supply. Earnings are released after the markets closed on Thursday. We pick up some unfilled sell orders. We build liquidity to the sellers. And guess what? They dump Amazon 200 points now below this demand zone going into earnings. So it's just how the market moves. Price precedes news. Price tells you everything you need to know about the market. All these clues the market drops. Your goal as a trader is to read it, get the context clues, and come up with a trading plan. Tesla broke out of a wedge. We had supply right above, opened up right inside of supply, and dumped about 30 points and just hung around it, going into the whole afternoon, even morning session. So I think I'm going to end the video on that note. If you enjoyed it, hit the thumbs up button, subscribe to my channel, and if you truly want to learn more, check out the links in the description below. I offer a very in-depth and educational course that comes with access to the Discord at no extra cost. I also added a voice chat feature, and I plan on adding new videos to the course very soon. and current members will get the new videos. But besides that, I'm ending it. Peace out.